4 straight months of price drops, sales are down double digits year over year, and inventory still sitting at a 7-month supply. The Miami-Dade single-family home market is cooling down like the last ice age, but the real story is what's not happening and what that could mean for the months ahead. What's up, y'all? Jake Fletcher here with the Fletcher Group at eXp Realty, your greater Miami area real estate agent. And today we are breaking down all of the latest numbers, the data, the raw facts straight from the MLS for you regarding the Miami-Dade single-family home market. And trust me, there is a lot to cover this month. As always, the link to book a one-on-one consultation is down in the description below. Whether you're looking to buy your first place or looking to invest smart, I will help you personally navigate this market with confidence. So let's go ahead and get on into it. The first graph we're starting with here is sales. That's the green line there. And then average days on market is the blue line. So we saw 890 homes sell in August, which is actually up by 7 homes from July, but it's still down 12.7% year over year. So looking at that green line there, you see a small tick up, but compared to August of last year, we're actually down just a little bit, 12.7% year over year, which makes sense because, you know, we're continuing to see high interest rates and people waiting for this market to correct. But remember, August of 2024 was already slow. So this year's decline is even more telling about a broader market dynamic that's going on of slowing down, which is happening across the entire country. So pair that with days on market, which is our blue line there, rising to 90 days, up from 87 days in July, and a huge jump from just 61 days a year ago. And, you know, what we have there is a 47.5% year over year. So that means that homes are just sitting a lot longer, and buyers, you guys have all the time in the world right now. You have all the leverage in the world right now. Buyers are getting what they want in this market. So if you're somebody who is, you know, prepared to buy, you know, this is your time to really negotiate hard. All the buyers that I've been working with lately, that is what we've been doing. We've been writing offers like, you know, would have never gotten accepted, you know, a few years ago. And it's great because I love seeing people win. Now, on to the next graph here. We're going to look at inventory a little bit. So active number of listings, that's our green line there. We see went a little bit down, as did months of inventory. So inventory has been holding strong. We had 6,058 active listings, a 4.7% drop month over month, but we're still up 20.3% from last year. So looking at that green line, we see that little 4.7% drop month over month. But again, we're up over 20% from last year, which would have been right there. Okay. So, you know, pretty good amount of inventory on the market right now for single family homes. And now months of inventory, all that means is how long would it take to sell the current supply that's on the market if no new properties were listed, okay? So basically the rate of sales, essentially. So the months of inventory are still sitting at 7, like I alluded to in the intro. A 7, you know, it's been 7 months of inventory for 4 months now, so 4 months in a row. Even though the blue line doesn't look like a flat line, it's been, you know, wavering in between 7 months, you know, around that 7-month mark every single month, okay? So solidly in buyer's market territory. You know, a normal market is considered 6 months of inventory. Anything less than 6 is considered a seller's market. And then, of course, over 6 is considered a buyer's market. So, you know, we're in a good buyer's market. Again, you know, buyers are getting what they want. August of last year was actually the last month that we were technically in a seller's market. So if we go back over here, that's when we were at, you know, 5 months of inventory. That was the last time. So it's been a year since we were in a seller's market in Miami-Dade. Okay, so, you know, since then the momentum has really shifted and it stayed there. So we will see what will happen in the future. My gut is telling me we're going to see more of the current trend of buyers gaining control. Now, looking at the next listing or next graph here, expired listings and then number of new listings, that's the green and then blue line respectively. So looking at the blue line first, our number of new listings, sellers are pulling back, all right? New listings dropped 6.3% month over month, all right, down to 1,569 new listings. That's a clear signal that many homeowners are either waiting on lower interest rates or just flat out refusing to take the price cuts needed to get the deals done. All right. Now, meanwhile, in our green line, the expired listings are creeping up. 1,680 expired listings in August. It's a little hard to see. I can maybe zoom in a little bit for you guys there. You can see the blue line went down, green line looks like it was stable, but actually it was a 5 well, it was from last year. It actually was a 5.1% increase in the number of expired listings. So compared to over here, 5.1% increase from last year. So homes that aren't priced right, they're just not moving. And then if the sellers aren't willing to reduce their prices, then ultimately they're going to expire and go off of the market. So let's talk about pricing next. This is the one everybody always wants to know. This is where things get spicy. Now, the closed price to original price ratio, that's the green line there that is going into the center of the earth. And then the blue line is median sale price. So starting off with the closed price to original price ratio, if this is your first time on my channel or watching any of my videos, all that is a ratio to explain, an average across the market of how far did sellers end up selling versus what they were originally listed at. So if they were listed at 100,000 and it sold for 90,000, that's a 90% closed to original price ratio, okay? So things get really interesting here. We actually saw the lowest closed to original price ratio we've ever seen last month. So things picked up just a little bit month over month, from 94.0 to 94.2%, which sounds like a win for sellers, but context matters, okay? Last year in August, that number was 96.8%. Okay, so sellers are still taking way bigger price cuts than they're used to. And looking at our blue line here, the median sale price, you can see actually went down again. And we are now at $655,000 for the median sale price, which is down $5,000 for the fourth month in a row. So literally for the last 4 months, it's been 5,000 off, another 5,000, another 5,000, another 5,000. So, we have seen in that time a nearly 3% drop in median sale price since April. And April was actually the all-time high. As you can see, that was like way back over here. And that was the top of the market for prices, for median sale prices for single family homes. So at this rate, if we continue to see 5K off every month, if this trend holds, we could be looking at $635,000 by the end of the year, something that we have not seen in a really long time. And, it's still not really affordable by most standards, but it is a real shift. And it is, I think that it is the canary in the coal mine, or, basically a precursor to what's to come, which I think is going to be more price correction, honestly, y'all. I think that we're going to see prices slowly correct. It's not going to be a crash, but if we continue to see, 5K, 5K, 5K for another year from now, you're looking at what, $60,000 off in the next year. So, prices could go back into the 500 range, which would be pretty wild to see. And then actually, I wanted to show you guys this. If you zoom out to the 10-year graph here, same metrics, but we're looking at a 10-year time scale. The 10-year price trend, this market has definitely overextended, if we're being honest here, because what you see is, at the beginning of the pandemic and all the demand that came to South Florida, prices just skyrocketed to the moon. So if we just kind of like drew a straight line from where the trend was before, then we should really have been expecting a more normal price trend appreciation to lead us into the low 500s, maybe right around 500,000, if prices had followed a more normal trajectory, so to speak, as what it was in the late 2000 teens there. So listen up, y'all. Here is the bottom line. We are in a buyer's market. Okay, no ifs, ands, or buts about it. Homes are sitting, sellers are softening, prices are slowly coming down. This is the most negotiation power that we have seen in years for buyers, but it probably won't last forever. When interest rates do come down, you can definitely expect that buyer demand is going to pick up. It might pick up fast, it might pick up slow, it might pick up medium, fast, slow. We don't really know, but prices will likely follow. Once interest rates come down, which we're expecting to see some interest rate cuts in September, it doesn't really directly correlate if the Fed rate lowers to interest rates, but it usually does. That 10-year, the 10-year bond rate is going to be, is always a huge factor in mortgage rates, okay? So not a video about that, but if you want to look into it more, maybe I should do a video about that. Let me know in the comments down below if you guys would like an analysis of why the 10-year treasury rate is an indicator of mortgage rates. I'll do a video about that if you guys drop it in the comments down below. But once rates come down, demand picks up because buyers have more purchasing power, and then the more demand there is, well, what do you think is going to happen to prices? Probably something that, happened in the past when we saw demand pick up in this area, which is that prices go up. So if you're thinking about buying, timing the market perfectly is impossible, okay? I'm sorry. It's not possible to be, clairvoyant unless you're Miss Cleo. But here's the good news. Buying smart is not impossible, especially working with somebody like myself who knows the data better than anybody that you'll ever meet. So let's talk strategy. That's my offer to you guys. Let's get a strategy session in. Use that link down there in the description and book your buyer consultation with me. It's completely free. We will talk you through the best opportunities out there right now so that you can make the best informed decision for yourself and your family. Jake Fletcher here with the Fletcher Group at eXp Realty, and I will see you on the next one. Peace.